Today's pick number one is WIT. Wipro, a global leader in IT solutions and services, offers a wide array of services including systems integration, information systems outsourcing, software package implementation, and the development and maintenance of software applications. Their commitment to innovation and quality is underscored by being the first IT services company globally to achieve both PCMM Level 5 and SEI CMM Level 5 certifications. Wipro operates in the business, software services industry, positioned 99th out of 252 industries, according to Zacks Investment Research. Now, let's delve into the current discussion surrounding Wipro, particularly why there's a view that its stock, trading under the ticker symbol WIT, might be undervalued. This perception is influenced by a series of recent strategic moves and developments. First, the strategic appointment of Anne-Marie Roland as CEO of Capco marks a significant leadership shift aimed at bolstering future growth. Additionally, Wipro's expanded partnership with Nutanix is set to propel digital transformation and hybrid multi-cloud innovation. Their involvement in a major cloud transformation project for Manpower Group exemplifies Wipro's adeptness in handling comprehensive digital overhauls. Moreover, a collaborative venture with Nokia on a 5G private wireless solution signifies Wipro's commitment to pioneering next-generation technologies. Despite these promising developments, a note of caution arises from the analyst community. Some have assigned strong sell ratings to Wipro stock, reflecting concerns over IT services' competitive environment and pricing pressures. The variation in price targets further suggests a disparity between market expectations and the company's current valuation. Looking at Wipro's performance and prospects, the company has experienced modest growth since the year's start, buoyed slightly. Its diverse service offerings and strategic focus on crucial areas like cloud computing, analytics, and digital transformation position Wipro well for leveraging industry trends. However, the path is not without its challenges, including fierce competition in the IT sector and a vulnerability to global economic shifts. In conclusion, the notion that Wipro is undervalued may stem from comparing its proactive strategies against the backdrop of cautious analyst ratings and competitive industry pressures. While Wipro is making strides in essential areas for future growth, market sentiments, as reflected in analyst ratings and stock price targets, suggest a cautious outlook. This illustrates the hurdles Wipro faces in translating its strategic efforts into immediate stock performance gains amidst the potential for long-term growth. Today's pick number two is NMRA. Neumora Therapeutics Inc. is a clinical stage biopharmaceutical company. Its therapeutic pipeline currently consists of clinical and preclinical neuroscience programs that target novel mechanisms of action for a broad range of underserved neuropsychiatric disorders and neurodegenerative diseases. Neumora Therapeutics Inc. is based in Watertown, Massachusetts. Neumora Therapeutics operates in the medical, biomedical, and genetics industry, positioned 83rd out of 252 industries, according to Zacks Investment Research. Neumora Therapeutics stands at the forefront of neuroscience with its ambitious endeavor, the COASTAL program, entering phase 3 trials for navacaprant, a potential breakthrough treatment for major depressive disorder. The anticipation for the results, expected in 2024, highlights the company's commitment to addressing complex neurological conditions. Additionally, Neumora's exploration extends into schizophrenia and Alzheimer's disease agitation through its phase 1 studies of NMRA 266 and NMRA 511 respectively, further underlining its dedication to pioneering treatments in areas of significant unmet medical need. Financially, Neumora is on solid ground. As of December 31, 2023, the company reported having $463.8 million in cash, cash equivalents, and marketable securities. This financial reservoir is expected to sustain the company's ambitious clinical and preclinical endeavors well into 2026. This level of financial stability is a testament to Neumora's strategic planning and its potential to navigate the complexities of drug development with resilience. the stock market's perception of Neumora, as evidenced by analyst consensus, leans towards optimism with a moderate buy rating and an average price target suggesting substantial growth potential from its current trading levels. This optimism is grounded in the company's innovative approach to neuroscience and its financial readiness to push these frontiers further. Despite these strong fundamentals, Neumora stock experienced a notable dip, decreasing by 5.51%, which brings us to the heart of the current discourse. Such movements often attract heightened attention from the investment community, stirring debates over the stock's valuation. In the wake of this decline, it's important to recognize the strategic steps Neumora has been taking, including key leadership appointments in research and development, legal, and commercial sectors, emphasizing its resolve to address the pressing needs of patients with neurological disorders. The narrative around Neumora Therapeutics stock being oversold hinges on the contrast between short-term market dynamics and the company's long-term prospects. Short-term fluctuations often reflect immediate reactions to financial disclosures and progress updates, while the long-term view is anchored in the company's strategic initiatives, financial health, and the transformative potential of its drug pipeline. For investors, the essence of the debate lies in balancing these perspectives, acknowledging the inherent uncertainties of the biopharmaceutical sector, yet also recognizing the underlying value proposition offered by Neumora's comprehensive approach to innovation and patient care. Today's pick number 3 is CMTL. Comtech Telecommunications creates and sells innovative products and services for advanced communication solutions. It targets both commercial and government markets globally, offering solutions especially useful when traditional communication infrastructures are not available, inefficient, or too costly. Comtech operates through three main segments: telecommunications transmission, RF microwave amplifiers, and mobile data communications. Comtech Telecommunications operates in the wireless equipment industry, positioned 173rd out of 252 industries, according to Zacks Investment Research. The company's financial performance has been under scrutiny, especially after reporting a second quarter earnings shortfall for fiscal year 2024, with earnings per share at a 15-cent loss, missing the anticipated 28 cents gain. This development has drawn attention to Comtech's financial health and raised questions about its future prospects. In response to its financial challenges, Comtech has secured several strategic contracts and investments that appear to be pivotal for its recovery and future growth. These include a $48 million contract extension for next-generation 911 services, a $544 million contract with the U.S. Army, and a $45 million strategic investment. These moves are seen as essential steps in bolstering Comtech's market position and financial stability. Despite these efforts, Comtech's financial statements reveal a company struggling to maintain profitability, with a net income of minus $26,900,000 and a net margin of minus 4.02%. Analysts, however, have identified a potential upside for Comtech's stock, with price targets suggesting a substantial increase, indicating optimism about the company's ability to turn its fortunes around. The stock's performance has seen a decline, moving from $8.43 to $3.21 in 2024. The upcoming quarterly earnings announcement on June 13, 2024 is highly anticipated, as it will offer further insight into Comtech's financial recovery efforts and whether the strategic initiatives undertaken are beginning to bear fruit. In summary, Comtech Telecommunications faces significant challenges, underscored by recent financial performance. However, the strategic contracts and investments secured by the company offer potential pathways for stabilization and growth. The next earnings announcement will be critical in providing a clearer picture of Comtech's financial health and its prospects for recovery in a highly competitive industry. Today's pick number 4 is PYXS. Pyxis Oncology Inc. is a preclinical oncology company. It focuses on developing an arsenal of next-generation therapeutics to target difficult-to-treat cancers. The company's product pipeline includes antibody-drug conjugate and monoclonal antibody. Pyxis Oncology Inc. is based in Cambridge, Massachusetts. Pyxis Oncology operates in the medical drugs industry, positioned 99th out of 252 industries, according to Zacks Investment Research. The journey of Pyxis Oncology's stock reflects the volatile nature of the biotech industry. Despite a significant decline of 19.56% on Friday, the stock still garners a strong buy consensus among analysts. This optimism seems to stem from the company's active clinical trials and a strategic financial boost marked by a $50 million private placement aimed to support its operations into the second half of 2026. A key highlight in Pyxis Oncology's narrative is its partnership with Pfizer, a major player in the pharmaceutical industry. Pfizer's decision to escalate its investment in Pyxis is often interpreted as a strong endorsement of the company's research and potential. However, this story is not without its complexities. The decision by Pyxis Oncology's president and CEO Lara Sullivan to sell 27,917 shares has prompted some market observers to speculate about the stock's future, especially in light of bearish signals from technical analyses. In summarizing Pyxis Oncology's current standing, it's clear that the company is navigating a path filled with both promise and uncertainty. While analysts exhibit a degree of optimism based on the company's strategic moves and the backing from Pfizer, the fluctuating stock price and executive stock sales introduce a note of caution. Today's pick number 5 is slrn. Acelyrin Inc. is a clinical biopharma company. It focuses on identifying, acquiring, and accelerating the development and commercialization of transformative medicines. The company's lead product candidate is izokibep. Acelyrin Inc. is based in Agoura Hills, California. Acelyrin operates in the medical, biomedical, and genetics industry, positioned 83rd out of 252 industries, according to Zacks Investment Research. So why slrn may be oversold? This perspective is based on an array of elements that merit consideration. The core of our discussion revolves around Acelyrin's engagement in clinical trials, a significant indicator of its future potential. Among these, izokibep, aimed at combating psoriatic arthritis, stands out, currently in phase 3 clinical trials. Alongside, the company is also advancing lonigutamab for thyroid eye disease and slrn 517 for chronic urticaria. These efforts are not just milestones in medical research, but are also pivotal in evaluating the company's capability to generate future revenue. Turning our gaze towards the company's financial backing, Acelyrin has garnered attention from institutional investors, with entities such as Vanguard Group and Goldman Sachs Group making notable investments. Institutional interest is often a barometer of confidence in a company's longevity and success, providing a layer of validation. Analysts who play a crucial role in shaping market perceptions have varied views on slrn. Some have set ambitious price targets, suggesting a potential upside, with the consensus that leans towards a moderate buy rating. This consensus offers a glimpse into the analytical community's assessment of the company's financial health and growth prospects. Recent stock performance, however, tells a different story. Acelyrin's shares have faced downward pressure since the onset of 2024, a trend that prompts questions about the market's current valuation of the company. This divergence between market performance and the company's advancements and potential could be a marker of the stock being oversold. The upcoming quarterly earnings announcement is awaited with interest, as it promises to provide further clarity on Acelyrin's financial status and operational progress. This event could serve as a catalyst, potentially influencing the stock's trajectory. In summary, when we piece together the narrative of Acelyrin Inc.'s clinical pipeline, institutional support, analysts' forecasts, and stock performance, a nuanced picture emerges. It suggests that while the company faces challenges, there are also under-recognized strengths that could imply its stock is currently undervalued.